So the trade war is getting from bad to worse, and as we peel the layers off, we get to the heart of the matter. America's main agenda is to contain China. It isn't even about creating Fortress America anymore. It's about turning the entire world against the Chinese economy to make the US great again. In an interview with Fox, Trump let slip the real plan, which is actually very horrifying. When asked if he would force Latin America to choose between US money or China's BRI, he said maybe they should do that. If there's ever a splitting of the world order, this is it. And the trigger event would likely be Trump's trade war with China. Now, Bezos himself has also floated the idea to many economies as well, especially during this period. Countries are negotiating trade deals with the US, and cutting China out will be a key part of the terms. It shouldn't be a surprise. Bezos has long signaled that this was in the works, even scolded Spain for thinking of joining up with the Chinese.
Japan, South Korea, India, and I will note that they are all around China. We have Vietnam coming today, so everyone is coming to the table, and basically China's surrounded. The other thing that I would note is that. A Spanish official said today that maybe Europe should look to China instead of the U.S. And I can tell you that is a losing proposition for the Europeans, because what is going to happen, and we've already seen it starting last week, that as we put up the tariff wall, China's business model is predicated on this incredibly imbalanced economy and exporting low-cost goods and subsidized goods to the rest of the world. And guess where they are going to land? On the European shores.
So the US basically has two tools to try to force countries to cave. And the first is the removal of the reciprocal tariffs after the 90-day pause. But then again, this isn't a carrot. It was the US that imposed it in the first place. And the second is to impose secondary tariffs. Raise the tariff level on countries that cooperate with China. And once again, this is weaponizing the US consumer market to an unthinkable degree. It's no longer just about securing the US economy, it's about statecraft, how to use economic policies to shift the world away from China. But here's the funny thing, even US companies are not buying what Washington is selling. Nvidia just ran to Beijing after the US banned their chip sales to China, which tells us how the world's most advanced chip giant is still heavily dependent on the Chinese market. There's simply no replacement. Trump is doing a general caster on US industries, and no rational company wants to join in with the madness. China is the world's biggest consumer of semiconductors, and cutting away sales would just hamstring the company's future. By banning Nvidia's H20 chip to China, Trump is about to destroy an entire product line designed to comply with US restrictions in the first place. In other words, Nvidia is about to take a $5.5 billion hit from Trump's executive order. So if you are wondering why big tech collapsed over the last few days, this is why everything was flashing red and is still continuing to flash red. Washington believes they can stop Chinese exports to the world, but they haven't really thought about the blowback effects, especially to whoever jumps on board the idea. Apart from Nvidia selling semiconductors to Beijing, the Dutch chipmaker ASML is also in panic mode. They could be the next victims. If US allies all form a coalition against Chinese exports, China could retaliate and cut away their import of chip makers. Or maybe Trump himself could just order ASML not to sell, or the Netherlands could face secondary tariffs. Even after the sanctions, China still accounts for 27% of ASML's total sales. That is still an enormous amount. It's revenue the company needs to plow back into R&D to really stay ahead of the game. Now magnify this to other chip giants like Tokyo Electron in Japan or Samsung in Korea. Trump asking the world to choose can really cause a global calamity that will ultimately end with China winning. And let's be serious here. What have we seen over the past 6 months? China can catch up in the technology race. Banning them from critical industries will force them to innovate harder and catch up even faster. And around the world, central banks are starting to sound the alarm on the tariff war. The ECB has slashed interest rates again for the seventh time. This brings the effective rate down to nearly 2%. Despite the threat of high inflation, Europe is worried about the eventual destination, which is a recession/depression. And this is exactly what global economies are going to experience from the US trade war. During her speech, Lagarde basically warned the odds of a global contraction are getting more real than ever before. This doesn't just apply to the EU but the entire world. Downside risk to economic growth has increased. Demand for exports will be dampened, and that may drag down investment and consumption, which will lead to tighter financing conditions. And to put it mildly, liquidity itself could dry up, credit could dry up, and even a banking crisis might be on the cards. It's also another reason why the world, at least most of it, will ignore the US to isolate China. They won't do it. When Trump threatens the world with the US consumer market, it's important to investigate how big of a threat that really is, because we know US government spending will either drop or they will just go local. So global exports to the US will fall squarely on the backs of the American consumer, private household spending. Well, it's not looking good. US consumer sentiment is reaching disaster levels. We are back to the lows in June 2022, when the US had two consecutive quarters of negative GDP growth. Meanwhile, inflation expectations for the next month have flown up to 6.7%. This is not normal. It's a sign that the consumer, they are hunkering down and tightening their belt. Anything that is not essential will be thrown out of their shopping budget. So if you're Japan and you want to set up a factory in the US, will you sell enough to recoup your investment? That's a very serious question to ask. Is it really worth it to cut away China when the US economy itself is facing a consumption collapse? Even the US central bank, the Federal Reserve, they are sounding the alarm bells.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
Normally, the Fed keeps their cards close to their chest, but what Trump is doing is even freaking power out. He just admitted that the tariffs will cause high inflation and slower growth. And as rational human beings, we all know that to be true. And if you want a barometer of how close that hits home, just take a little peek at what Trump just wrote. Once again, we have Trump trying to mess with Fed independence. Jerome Powell of the Fed, who is always too late and wrong, that the report is wrong, that the US is getting rich on tariffs. But this next part is really disturbing, that Powell's termination cannot come fast enough. And let's read between the lines here. Trump wants to force Jerome Powell to resign. And even if Powell stays put, the next Fed chair will be very trigger happy with the rate cuts. Trump will get his rate cut sooner or later, whether the inflation crisis gets worse or not. Now, the statements coming out of the Fed paints a very bleak future. They are echoing what we have been saying for a very long time. Consumer psychology itself is breaking down, and it's going to push the US economy into a recession.
Yeah, JP Morgan CEO Jamie Dimon said the odds of a recession are now at 50-50. Goldman Sachs says 45% chance of recession. Is the risk that high in your estimate?
You know, it's really going to be determined by are there quick resolutions, to your prior guest, are there quick resolutions to these trade uncertainties with our major trading partners? The faster those resolutions come, I think the more that confidence can be restored, and hopefully those odds can be brought down. But it is a serious situation. If everybody gets nervous at the same time, businesses and consumers, and they all pull back at the same time, that can lead to an economic downturn just by itself.
We cannot overstate how important consumer demand is for the US economy. And if you're in the stock market or anything in the US at all, reading the tea leaves is very important. Trump's trade war is eroding all consumer confidence. Not just in the next 12 months, we could see a structural decline in US consumption for the foreseeable future. The 5 to 10 year inflation expectations have hit at an insane 4.4%. That's the highest level since 1991. That's worse than the money printing era of 2020 and 2009 after the housing collapse. Meanwhile, payrolls are trending down. Since December 2021, fewer jobs have been created in the United States, and that's going to take a toll on consumption. Aggregate spending in the US is going to come down. That's why stock prices just refuse to rise. Investors see the crisis and they are forcing US equities to price lower. And the way this trade war is being waged, tomorrow's headline might be another disaster again. And if we ever need to see confirmation of the problem, the bond market is still flashing red. US Treasuries fell once again in value. Powell is 100% committed to keep inflation down, which means rate cuts might not come in as furious as everyone expected. And since 2025, the US term premium is well into the positive territory, which means investors are demanding a higher return to buy bonds on the longer end of the curve. This is one absolute nightmare for Scott Bessent, who wants to keep bond yields down, especially on a 10-year. But he can't influence the Fed, and Powell surprisingly has a spine of steel. Unless the entire economy and financial system collapses, we shouldn't really expect the Federal Reserve to step in. The Fed put or the Trump put is out, and all it takes is for the Trump team to go crazy again and impose new tariffs to crash everything. So if you have money in the US markets, you need to be aware of this big risk. Powell has confirmed he will not save your portfolio.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on, and it's really the policies, particularly the trade policy, and really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility.
So the Federal Reserve today might be the last Fed that is truly independent. And once Trump gets his new man, we can expect a much looser monetary policy to drive the economy. Now, I'm not saying that we will get zero interest rates, but we better brace for another inflation problem down the road. Powell's term ends in May 2026 next year. And as we speak, Bessent is going to start interviewing candidates to replace Powell. And I bet it'll be someone very friendly to Trump and pro-tariff policy. And whatever Trump wants, Trump is going to get from the upcoming Fed. Should that come to pass, we can expect a horrible ending for bondholders who will see inflation eat away at their returns. Conversely, this is going to be awesome for gold. Now, looking at the performance of bonds versus gold, the story becomes very clear who's the big winner here. Since 2020, long-term US bonds have crashed by nearly 45% in absolute terms. Meanwhile, gold has gained value by over 110%. So bondholders got destroyed twice in 5 years, once from the Fed hiking rates and another from this trade war. But the trend is clear. Investors and the market, they are losing faith in US debt. The dollar is down, bonds are down, and stocks are clearly down. And I want to end this video with a very important message from the Fed. For all investors, according to Kashkari, they have concluded that there are other attractive places to invest in. Why? Because the US trade deficit is going to come down thanks to Trump's policies. So don't be surprised if US stocks and bonds underperform for the foreseeable future. And can this be reversed? Sure, but Trump will have to U-turn everything and accept defeat. And I'm not sure if that will ever happen. But let me know what you think. Will the world boycott China for the US? Or will investors continue dumping more US assets? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.